Hey, hi guys. I'm glad to be back. I was a little bit sick last week, but now I'm back on track. We are today here discussing the UK first GDP first estimate, which will be out in about 10 minutes from now, and me and Max are here to cover this data for you. So as you can see, at the current moment, the forecast stands at 0.6%, while the prior figure stood at 0.7%. And talking a little bit more about the projections and the historical movement of the indicator, I would like to remind you that the UK's economy expanded 0.7% in the second quarter, compared to a 0.4% growth in the previous quarter. Economic output was 2.6% higher than in the same period a year ago. This was the 10th quarter of sustained economic growth in the UK. Industrial output figures registered the biggest increase since late 2010, rising 7.8%, and domestic demand is rising due to a low inflation boosting consumer spending. However, there are still risks in the world economy, with instability in the Eurozone and in China. And the UK GDP is expected now once again to reach 0.6% in the third quarter, while the recent data has been rather positive. And we also have our experts' opinion on the matter. So according to their views, we have the Bloomberg survey summary, where the median estimate stands at 0.6%, average estimate stands at 0.5%, high estimate stands at 0.6%, low estimate is also 0.5%, while the total number of estimates has reached 35 this time. And here you can see also different estimates from different experts from different banks and institutions again. And here also is a quote from Neil Jones, the London-based head of hedge fund sales at Mitsuo Bank Ltd, who says that they will stay relatively strong in terms of the UK data this time. And of course, last but not least, we have our Dukascopy community member sentiment on GBP USD currency pair. So here you can see that the traders this time went rather bearish on the matter, with 55.88% bearish votes versus the 44.12% bullish votes this time. And as always, you can see a couple of comments on my screen. I hope you can clearly see them. I think I can enlarge them as well. So the first community member under the nickname Gactor says that British economy looks quite strong at the moment, and he hopes to see good numbers of GDP expansion that should benefit the pound, as rate rise in the UK should be a bit closer then. His opinion is opposed to opinion of the Trend Forex who says that he is voting for bearish impact, as the UK's gross domestic product is widely expected to have expanded 0.6% in the third quarter against 0.7% in the second quarter. UK economy is largely services based and has been insulated from recent turmoil like Chinese slowdown, Eurozone migrant crisis, and so on. But Eurozone, being its major trading partner, is embarking on a huge expanded QE program to combat deflation, will adversely impact the UK's economic well-being, says the bearish member. So here, guys, I don't have quite much time left. I'm happy to see you all here again, and right now I would like to give the floor to Max, who will cover the technicals and also the initial reaction of the market on the pair. So please, Max, if you're ready, take the action.
Thank you very much, Kate. Hello everybody. I hope you have a great day. So yes, we are discussing the UK GDP actually reading GDP data for the third quarter of this year, and the expectation is for a 0.6% increase on a quarterly basis. At the same time, there are many expectations that say that growth will be just 0.5%. And actually, the average estimate among Bloomberg surveyed economists is just 0.55 percentage points, while the 0.6% growth is the median estimate. For instance, such big financial institutions as BNP Paribas and the Royal Bank of Scotland, they expect a 0.5% growth in GDP. But we will see that in around 4 minutes from now. Also, I would like to mention that actually the UK economy has seen quite a softer services sector growth in the third quarter. Also, there is weak manufacturing data coming in constantly for already quite a time, and the strong pound is waiting also on the growth in the UK, and therefore we have the negative surprise trading strategy today, and we are discussing the cable. Even though it at the moment has quite a bit of bullish sentiment in the market, slightly more than 53% of all open trades are long right now. At the same time, as you can see, the pending orders on this currency pair in both 50 and 100 pip ranges from the current market price are very mixed indeed at the moment. Speaking more about the trading strategy itself, as you can see, the pair actually has started declining already, possibly pricing in the possible data, which will be available in 3 minutes from now. Some minutes ago, the pair traded quite flat around the mark of 1.5350, but now the level of trading is already 20 pips lower. And as usual, of course, to project the possible market reaction after the data is released, finally, let's have a look at the previous market reactions for the same data release, the historical data, and actually the average reaction for the 5 past quarters was 18 pips for the cable, but it was stronger than the average number in the last 2 quarters. For instance, in May, when we used to have data for the first quarter of this year, the reaction was 31 pip for the cable. And as usually, of course, to project the possible market reaction, let's take this average one indicator, and actually we first of all we placed the first take profit level around the 4-hour S3 support line, which is placed at 1.5326, which is some 10 pips just below the current spot price. But in case the data is released really worse than the median estimate of 0.6 percentage points, we can see the cable declining even more, potentially down to the third support level and the second take profit level, respectively, around 1.5315. For the purpose, the stop loss level also is at the moment placed at 1.5365 level, but it can be fairly adjust slightly to the downside due to the most recent developments of this currency pair, so possibly in the area just above 1.5350. But of course, it is logical that in case we have bigger surprises from the data, some unexpected numbers, we can see really strong reactions from the pound, and at the same time we can see no reactions at all or very slight reactions if the data is released pretty much in line with expectations on both the quarterly and the annual basis. So at last, since I have just 30 seconds to go, let's have a look at the technical indicators, which at the moment is also are pointing to the downside for the cable. So they suggest the currency will decline after the data is released, but we still don't know the numbers. We have 15 seconds left till that moment, very important moment for Britain indeed. So let's just wait for the numbers to come in, and let's see what the initial market reaction on the table is. So yes, we see some downside actually, initial market reaction not very strong, but yes, actually the UK GDP rose by 0.5% in the third quarter, as it was estimated by some major banks. It was worse than the median estimate of 0.6%, and initially, as you can see, the pair has gone quite down by some, let's say, 20 pips to the downside to reach the second take profit level and to reach the level of 1.5310. So, and now the currency pair has actually bounced back to the levels we have seen just a couple of minutes ago. So I guess that for now that will be all from my side on the technical part for this data release on the UK GDP. We will also have the second data release today on the US core durable goods orders at 12:30 p.m. GMT. So feel free to join us then, and see you all in some couple of hours. Bye bye, and back to you, Kate.
Well, thank you, Max, and then thank you guys for attending. Yes, see you in a couple of hours. That's it for this data release for today, and stay tuned and stay with us. So, bye-bye.